Welcome to Markets Now. I'm Michelle Rook with Dwayne Bussey with Bolt Marketing. Well, a mostly higher day in the grain and livestock futures with the exception of live cattle futures. And Dwayne, we've been, I think, on a 3-day run here in the grain complex being higher, but led by wheat. Do we have enough weather premium in that wheat market yet, or risk premium, I should say?
We might when it comes to the wheat market. I mean, it's hard to say because we've got some rains in the forecast for Kansas. So I could see the market slowing down tomorrow and saying, well, if these rains materialize, the crop condition decline will stop. But, it was quite a decline the last 2 weeks, I'm going to say, in Kansas and Oklahoma. Southwestern part of the growing region really deteriorating. Of course, it's starting from a higher level, right, than last year. So we're still crop ratings above a year ago. But, this is a critical time, right? This is when we need rain in that Kansas wheat crop. And if you don't get it and the rains don't materialize, well, then the answer is no. We got to build more weather premium.
And we've got some global issues weather-wise in some other places, too, that is kind of helping push this, isn't it?
Yeah, southern Russia has been very hot and now been fairly dry for a while. Europe's got their own issues there as well, too. And, the Russia-Ukraine war, I know the wheat market is so tired of hearing it, but for the last month and a half, 6 weeks, 8 weeks, war has been intensifying. And of course, over the weekend, Russia launched more missiles at the Odessa port, So I think it's time to build a little bit of war premium again. I know nobody likes talking about it anymore, but that's still a very big issue. If for some reason Ukraine can't get their crop out, wheat market could really take off again.
And Dwayne, from a technical standpoint, Kansas City wheat above the 100-day moving average. So that's a pretty strong technical signal, isn't it?
It really is. I like it. The chart, it's kind of amazing look as I'm looking over here, glancing at the chart, and we haven't been this high in Kansas City wheat since the end of January, and it happened really in 2 or 3 trading sessions. So it is fun and kind of catching everyone just a little off guard because of how fast it's happening. We've been in a sideways, boring trade here. Maybe this closing above these technical points, the 100-day moving average, is enough for a fund who's short to say, I don't know if I want to be short this many contracts. And then this kind of snowballs on itself. So, maybe it is a bigger picture rally coming.
So corn and soybeans look like they're following wheat, Dwayne, but is this all short covering right now that's helping to support the soybean and the corn market?
Yeah, I think it is short covering. And you're right. There's not really a crazy bullish story for corn by itself. Now, export demand has been great. Weekly inspections report was really good this week. But if you watch the market closely and then watch some charts, you'll see that wheat rallied and then corn rallied. Corn is definitely being pulled up by the wheat market, which is fine by me. Whatever gets the corn market higher, I'll take. Now, the soybeans made a bit of a double bottom and maybe trying to pull up from here. But no, to answer your original question, this is wheat actually pulling corn and soybeans higher, not the other way around.
Yeah. And you don't think there's a big enough weather story there, even if these rains confirm and we keep planters out of the field to keep the corn or wheat or the corn or soybean market going?
I don't think so. Because when you think about it, 2 weeks ago, we were all talking about how dry Iowa was and La Nina coming in later this year. Maybe this is 2012 all over again, right? And now all of a sudden, I do get a couple phone calls of guys saying, Jesus, rain's kind of delaying corn planting. I'm like, it is, but I don't think the funds are going to listen to us if we try to say we're too wet now for planting. Now, me in my area in the Dakotas, I'm always worried about rains coming in and getting delayed planting. But I got to tell you, planters are starting to roll around here. North Dakota is very dry. So, the temperatures are supposed to be above normal. So even when we get this rain, I think we'll get back on the field. So no, I don't think we got a delayed planting story.
Yeah. Is the other difference maybe from some of the previous rallies that we've had in the grains is that we're not getting as much farmer selling as we have before?
Yeah, I think it is. And I think the reason why is because farmers are a little busy now. They're not on their 4th cup of coffee watching the markets do in the morning, do nothing. And if it rallies a little bit, they used to sell. Where now they're out in the planters. And I know for me anyway, first couple of days is always a little bit more stressful in the planter. You're still watching things, getting accustomed to everything again. And I think they just let the market rally. I haven't seen that farmer selling we've seen on rallies like this before. But if you creep up much more, trust me, you're going to see some farmer selling. In fact, I'd like to give the farmer some advice of, sit down and don't ignore the markets this time of year. Put some targets out there if you got the old crop left to sell. And the new crop too. We're 474. From here on up is where I'm scale up selling December corn. So have those marketing orders in place.
We have not talked about the technicals in corn and soybeans. Corn at least is what, above the 50-day moving average?
Yeah, it's sure above the 20, above the 50, back up above this kind of imaginary upward trend line that I've got drawn. Next resistance for July corn is, I'd say, 460. And then above that is 471. You've got the 100-day right in between those two at 464. That 100-day moving average, I bet, will be kind of a big resistance point. And, in that area, I think you will see, even if farmers are busy, I think you'll see them pick up selling. It'll be hard to continue to rally it with that going on.
And what about soybeans? We're a ways yet from the $12 mark, but sometimes we can get there faster than we think.
Yeah, true. I guess for soybeans, I'm just happy we stopped going lower. Man, we
Yeah.
I know we formed a double bottom there around that 1140 in July. Now we're back up to 1182. So like you said, in a heartbeat, you can rally 40 cents in beans. We are not above the 20-day there, though. We kind of hit that resistance point today. I'm hoping we can get through that. I don't know if it's going to be tomorrow, though, or not. We're a long ways away from the 100-day on soybeans. It just doesn't quite have that bullish export demand that corn does. So we've got a little bit of a lack of story there on soybeans. Unless you start to get talk that soybean acres are lower, it's really going to be hard to rally beans. But I keep thinking soybeans have to rally to kind of buy some acres from corn, but evidently I'm the only one thinking that.
As we look at the grain markets right now, do you think this is the start of a bigger short covering rally by the funds? Is this the start of it or not?
When I look at corn and soybean charts, I say absolutely not. This is nothing. But I got to admit, when you look at the wheat chart, like I said, this is a really big, quick spike up. I don't think we have that spark we're needing yet. We don't have that. Oh my gosh, is this 2012 all over again? An Iowa drought type scenario now. We don't have we're going to have 12 million acres to prevent plant story. We're lacking something. But all that being said, I still think something like that happens, Michelle. It's hard for funds to stay this heavily short all the way through the growing season. And today, with today's media and the way things, flood around with social media, I just think you'll get some sort of story, and that spark will happen. Is this the beginning of it? The timing makes sense. End of April, beginning of May, this is usually when we're making rallies in the corn market. So the timing makes sense. I just can't quite confirm that this is it for sure yet.
And the cattle market had a nice update yesterday on the heels of the bullish placements number in the cattle on feed report. Live cattle kind of stopped out today or took a breather. And did we just run up into resistance or what?
I think we did a little bit, and maybe that cattle on feed report maybe ran out of steam just a little bit. It tends to be, and that was an odd cattle on feed report for me. I mean, no doubt placements were sharply lower, even lower than the lowest trade estimate, but marketings were horrible. On feed was still fairly high. And when you think about the weights, we've got a lot of cattle coming in here to packers. And I think today what you found is maybe packers flexing their muscle a little bit. The June live cattle board failed to rally above Monday's high. And when that happened, I think packers flexed their muscles just a little bit and maybe help push this market down a little bit. It might be tough for cash cattle to rally is what I'm trying to say. We still have a lot of cattle right up front, but obviously with less placements, longer term, we're seeing is still a bull market here. And that's why these back months always have support.
Hogs back to the plus side. It looks like we've maybe started to negate the bearish key reversal that we had a couple of weeks ago. Do you think that hogs are just kind of following their own fundamentals here with higher cash and cutout values, or is this just a technical play?
I think mostly technical, I'd say. I mean, this hog market is crazy, Michelle. What it reminded me today is why I don't trade money hog contracts. Big sweeping reversal 2 weeks ago. We pulled down to a 38% retracement level and now a nice bounce back. I guess maybe I should trade it because it looks very technical in nature to me this time around. But, cash is still strong. We expect demand to be strong this summer. So it looks like now we have to go back and test those highs of 110 again. But that market is pretty wild and just goes to its own drum, I guess you could say.
Yeah, I was going to ask you if you thought we had enough gas in the tank here to retest the contract highs or not.
Yeah, I think so. I think that's what it looks like it wants to do here.
Okay. Thanks for joining us. That's Dwayne Butsey with Bolt Marketing. That is Markets Now.